Good afternoon, everyone. Welcome to another webinar with Streak. This is going to be part 2 on trading chart patterns. If you want to see the part 1, it is also available on Zerodha Streak channel, which you can see after this webinar. So let's continue. So in this webinar, we are going to cover trading chart patterns. So first we are going to cover the topic why should somebody study chart patterns. Okay. Then we are going to cover three very key chart patterns. Part 1 already had a set of three patterns. Now this is part 2 and it also covers very three important trading chart patterns. One is head and shoulder patterns. Second is V top and V bottom patterns, which is shown by the second picture here. And the third one is broadening pattern. Okay, so this is going to be very interesting and will have a lot of information. So feel free to pause wherever you need to and feel free to ask us any questions that you have. Also, I just want to point this out. A Hindi version of the same webinar will be coming soon in a couple of days on Streak's official channel. So stay tuned. So let's get started. Why study chart patterns? So see, there are various tools that are available for the next generation traders. Some prefer to use indicators, some prefers to use patterns, and some use mathematical modeling, right, to carry out their analysis. And some traders do a combination of these techniques. It is important to master one of these techniques, but one should also know what other tools the market participants are using. Okay, so having that in mind, let's dive into why. Let's get into those chart patterns, because you might be a technical indicator, a technical trader, you might be a pattern trader. You should always understand what the other side has, and it adds to the benefit in the analysis that you are doing. So what causes chart patterns? Traders have a certain behavior which is repetitive, not very finely repetitive, but broadly when looked at, some kind of patterns occur, and these behaviors of markets combined together cause these chart patterns to occur. So quick recap from previous webinar. Broadly classified, there are two types of chart patterns. One is continuation patterns and other one is reversal patterns. So what are continuation patterns? Continuation patterns basically indicate that if a trend existed and might have slowed down, the trend might continue again, right? So the first one is bullish continuation. The second one is bearish continuation, where the stock was bearish, slowed down for some time, was not looking too much bearish again, but continued because of the pattern. I mean, continued and was identified as due to the pattern. Now the other category is reversal pattern, which indicates bullish reversal and bearish reversal. I mean, that's a classes. Bullish reversal indicates that, okay, a stock was bearish and the pattern happened, so might indicate the stock to become bullish again. Bearish reversal indicates that if a stock was bullish and then because of the pattern it started to become bearish. So bullish reversal occurs when a bearish trend is ending, and bearish reversal occurs when a bullish trend is ending. Okay, clear? Brilliant. So let's get started with the first pattern, which is very famous, very important. It's head and shoulders pattern, and also it's quite complicated. So let's first understand what head and shoulders pattern signifies. So head and shoulders is a reversal pattern. So it falls in the second category of patterns, and it signifies or it occurs towards the end of a trend. It is significant if there was already an existing trend and then a head and shoulders occurred, showing that, okay, there is a possibility that a trend might change. Now this is the reversal patterns, and there are two versions obviously of this, bearish and bullish reversal. Don't worry, we are going to cover both of them. So bullish head and shoulders pattern consists of three peaks. First and third peaks here, as pointed by my cursor, are right shoulder and left shoulder, and the middle one is the head, naturally trying to indicate a person. right? And then there's a neckline that is where the lows sort of match. So this is an ideal head and shoulders pattern. Very hard to come by, but this is how it looks. So let's get into scanning. With Streak Scanner, you basically will be able to create as many conditions as you want on different kind of chart patterns, different kind of technical based strategies and scanning. Uh, but as head and shoulders is a bit complicated one, this kind of conditions might look intimidating, but don't worry, you can pause the screenshot and just type exactly what you see on the screen to recreate the results. Now, having said that, why is head and shoulders a bit complex? It is because you need to be able to identify a formation of left shoulder, then a dip, then again a rise which is higher than the shoulder to form a head, then again a dip, then a right shoulder. So this requires individual line level conditions to be written, and that's why it is there. But this is the simplest that it can get. With 6 lines, you are basically going to identify head and shoulders pattern. Now keep in mind, as I mentioned, it is a complex pattern and doesn't occur too much in its ideal form. And to avoid that, we have the first this scanner is a more lenient version, a more sort of you can say forgiving version of head and shoulders pattern, where it will be able to scan for those head and shoulders which are not that sharp, that ideal form, but they basically show some kind of head and shoulder resemblance. We also will go in the next slide are going to cover a more rigid and a more strict version of head and shoulders, but let's cover both. Feel free to pause wherever you need and feel free to ask questions as well. So let me just take you to the scanners. So to do this, you have to go to streak.tech, and once you go there, you can click on scanners and my scans to create a new scans. Okay, just because it is a big scanner, I have already created it, so I'll just click and edit and I'll explain what these things mean. Okay, so first thing is I want to scan on Nifty 500. You can scan on your custom basket as well, but I'll just scan on Nifty 500. Time frame is 30 minutes. I'm going to use candlestick pattern. You can also use Heikin-Ashi, but I'm going to use candlesticks. Now, if you see, there are 1, 2, 3, 4, 5, total 5 conditions which can easily identify such a complicated pattern, which is head and shoulders pattern. Now, what is this period max first? A lot of people ask. It's just a simple technique of getting the maximum value of anything, like in this case the maximum highest value in 20 candles. So this is period, so I can say 20, make this 40, so I'll just identify in 40 candles, but I'll keep it 20. So what period max lets you get is, it gives you the maximum value for the number of candles in from a given time, right? So example is period max 20 high minus 1 will give you the highest price that the stock has gotten in last 20 candles. Now why do I say last 20 candles? Because the offset is from -1, so that means it takes the latest candle that has formed, goes back 20 candles. In those 20 candles, what was the highest value that is being returned here? Okay, now that should be lower than the period max of 40 candles, but with an offset of -21, which basically means I'm skipping the first 20 candles, and from there I'm looking back for 40 candles and trying to identify, was there a peak, what was the peak actually, and making sure that that my high is lower than that. How much lower than that? When I multiply by 0.99, I'm indicating that my the recent high in last 20 candles should be 1% lower than the high that was achieved in previous 40 candles. what this achieves for us, okay, let me go to this picture. So what this achieves for us is in last 20 candles, the cursor where I'm moving on the neckline, if you see the last 20 candles, the high that was formed, which is this, should be less by 1% than the high that was formed in last 40 candles. So this is going to again where I'm indicating my cursor on the neckline. This indicates in the 40 candles. So I have done an offset from here, from let's say where my cursor is the latest candle that has formed. From here I go back 20 candles, identify what is the high. Then from here again, which is with an offset of -20, because I want to start from here, I go back 40 candles and identify that high. Now the new high should be lower than by 1% than my previous high, indicating that there is a head and then there is a right shoulder. Now keep this in mind, okay, that I am just using to demonstrate here with 40 candles and 20 candles, but you can choose what period you want to look back at. Okay, then the next thing I have done is I have written another condition which says your period max, again the high of the recent 20 candles, should be higher than period max of 20 again the 40 candles after leaving the latest 20 candles into 0.97%. So I'm saying that okay, it should fall in this range of 1 to 3%. It should not be very below so that this becomes a flat line. Okay, so if I don't put this condition, okay, here I'm not I'll not say make sure that it is in a range. I have said that it is lower by 1%, but it should be higher than 3%. How did I come to this number? I did obviously 1 minus 1 divided by 100, which is 0.99. So I'm just saying it should be in this range, that my right shoulder is within a range of 1 to 3%. Okay, same thing will do for the left shoulder, which is done in the next two conditions, these two conditions. How did I identify a left shoulder? I did an offset of 61 candles here, because 20 is for my right shoulder, 40 is where my head comes. Okay, 40 is where my head comes with an offset of 21. Then I did an offset of 21 and the latest candle to get to 61. Okay, now in this I'm looking for 20 candles more, so I'm going from here, see, from here to here 20 candles, from here to here 40 candles. So now my offset is 41. Okay, sorry, 20, and from here to here 40, so my offset is 61. Sorry, now 61 offset is there. Then I'll say okay, from this 61 offset in last 20 candles, what is the high? Now that high also should be in a range of, should be lower than first of all head, but should not be too low. So that's why I'm saying it should be lower than by 1%, but not lower than by 3%. That's what these two conditions help me do, right? So you can pause it to make sure that you understand what has been done here. Now the last one is basically going to say that, again, this is a much more relaxed version, so we are just looking at only one bottom here. So I'm saying that from offset of 10 candles, so I'm basically saying from here where my cursor is in middle of the head to the middle of the right shoulder to middle of the head, that should be higher than the highest point that was achieved that was achieved by the head by at least, so I did by 0.99, so it should it should be higher by at least 5%. So what this indicates is, this makes sure that this low has not fallen too much down. This low has not fallen too much down. We can add one more condition, but that's what this indicates. This low should not be more than 5% away from the head. Okay, so now let's run this scan. We'll see on charts uh, what basically how does it look like. So we get a lot of stocks here once we identify, right? So I scanned on Nifty 50. So we get M&M, we get HFCL, Godrej, Fortis. So let's look at a couple of charts. So let me quickly open M&M. Okay, and I'll just remove all these indicators and make it. Also, let me just zoom in so it's much more clearer, and make the chart as 30 minutes. Again, as I said, this is a more lenient version of it. So let me explain why this scanner identified this condition, right? So first of all, let me just get a drawing pen. Yes. So this is forming your first, left shoulder. This is forming right shoulder. This is forming the head. Okay. So obviously these two levels are not same, right? These two levels are not same, and still it has identified as a head and shoulder. But because this is a much more lenient version, we have not added those conditions to be identified, and that's why it has been identified, and indicates that even though the trend tried to sort of become bullish, it has become bearish, which is indicating the reversal. So now let's look at another stock and see how close that was. So let's look at Page India. Okay, I'll just open Page India. Okay, so this has a much more better resemblance of a head and shoulders pattern. You have a head, you have some shoulder here, and you have some shoulder here, right? Now this is a very good indication of a head and shoulders pattern. It's much more closer. We can look at one more stock. We can, let's say Kotak Bank. Why not? So let's look at Kotak Bank. So if I zoom in, so if I look here, yes, sorry, 1 second, let me do clear. Yeah, so this is one shoulder, left shoulder, this is right shoulder, and then this is the head, big head, right? So now this is just a simple indication of how you can build a lenient version of head and shoulders, because this will give you more stocks. As you can see how many scan results we got here, but it is bit lenient. Now we'll cover a much more rigid and stricter version, which will try to find even more even more stricter head and shoulder patterns. So let's go to that. Now this is a very strict, looking for an ideal head and shoulders pattern scanner. You can pause it and create it as you want. Okay, now but there is a trade-off. The frequency of occurrences and how well how well they occur is defined by this complex pattern, right? The condition scans are much more defined for head and shoulder patterns, and that's why the number of stocks that you will find in this are much less, because it defines that okay, there should be two dips. Those two dips should be at the very same level because of the neckline, and then the left shoulder and right shoulder both should be of same height, and that's what is being indicated by this, right? So it has 1 2 3 4 5 6 7 8 conditions. Not bad, still less than 10, but still a lot, right? So let me just go to my scanners here and let me just open that up. So I think it's this one. Yes. So this is head and shoulder scanner again, and it has same conditions as before. It's just that instead of saying that the head and the head, instead of saying that the head and the right shoulder should have 1%, right shoulder should be 1% range of the head. Here we have made it, here we have made it in 2 to 4% range, as indicated by 0.98 and 0.96. So we are saying that the right shoulder should be lower by 0.2%, but up by but not much lower than 0.4%. So it is in that range of 2 to 4%. Same thing done for the left shoulder on in these two conditions. Now, very interesting, we have now added that we in the previous scanner we only took about this, we only covered this right shoulder's low point, the point between the head and the shoulder, okay, which is this one, and we didn't define a range for it. So now we have defined a range also for it. So this indicates that this right shoulder, the dip before the right shoulder is within a certain range, and this indicates the dip between the head and the left shoulder is within a certain range. Now don't worry about this. Once you look at this and create it once, it's saved in your account. You can change this to match whatever criteria, sort of whatever time frame you want to scan it for, and see how fast this is. Even though it is a big condition, as soon as you click you get the results. We were looking at Kotak financials, and yeah, I mean, it's already open, so that's why it is being identified, because you have very nicely forming shoulders here. You have a neckline, so which is indicated by the lows here and here, right? So this is forming a very good, this kind of a head and shoulder pattern. Okay, so now let's move on to, so that was head and shoulders top, which indicates a bearish trend, whereas this is head and shoulders bottom, which indicates a bullish trend. Again, this is a much more lenient version of it. Same way like how we created a much more stricter version, you can create this as well. So I'll quickly show you the results, so that and we'll discuss this on chart rather than sort of creating it from scratch, right? So we do the scan, we get 3 stocks, not many. Bullish trend is a bit weak in market, so that's why maybe only 3 stocks, whereas bearish we got so many. But again, in this we have Astral, we have Copal, and we have one more thing. So let's look at Astral, let's look at Copal. So let me just go here, Astral, okay. So we can clearly try to see some pattern here, so I'll just draw. Let me just move the chart a little bit up. Sorry. So you see that there is 1 shoulder here, 2 and 3, right? And then there is this bottom here. Although this is coincidence, we didn't put it for this, but because it is the scanner itself is lenient, it will identify very strict looking head and shoulders as well as lenient looking head and shoulders also. So we got another result called Colpal. Let's look at that as well. So that's this. You can see this here, and this here, right? So again, forming this head and shoulders. Okay. So let's move on. Now let's come to another pattern, which is again, so this is V top, V bottom. Okay, so as the name suggests, V top and V bottom resemble the letter V, and they are reversal patterns like the previous one, and they appear at the end of a trend. So V reversal patterns represent a sudden change in momentum. Okay. uh, and a very high volume accompanied with this reversal candlestick pattern um, at reversal points increases the validity of pattern. So that is very important to keep in mind. Okay, traders should also look for other confirmations like divergence, which we have covered in one of our previous webinars, and bullish and bearish crossovers or trendline breaches near these turning points. Okay, so let's look at how they are created. These are very simple to be identified. Okay, this is the point, this is the period you can increase to the increase to basically increase the duration for which you are checking the prior trend. Okay, so very simple, only two line conditions, you can easily create it. I'll show you here as well. So let me go here. I have V top, so let me edit this. Very simply, what we have done, we have identified that the EMA of the EMA close of 20 candles. So if I just click here, it's 20 period close price with an offset of 25. If you keep subtracting that with previous one, so what this is doing, let me just quickly explain here. EMA close 20 minus 25 and EMA close 20 minus 26. This basically means that it is taking the current candle's EMA and subtracting with previous candle's EMA, but not looking at the current latest 25 candles. It is looking at candles which are older than 25 candles and subtracting each one with the previous candle, and it is trying to make sure that the difference, the value difference between these two, the current EMA, candles EMA, and the previous ones is higher than 20, is higher than 0 for 20 periods. Okay, so it is basically going back 25 candles and then looking, did previous to 25 candles in the was the difference between the difference between the current candle and previous candles EMA higher than 0. Now why do we care about this difference and why have we used period mean? So this difference will basically tell me, okay, let me just plot EMA here and it will be very much easier for me to explain. So let's look at this EMA. Now what this says is, okay, I don't care about the current candle CMA. I want to look at the previous candle CMA. That's why I've used the offset minus 25 and minus 26. Now minus 25 and minus 26 is used because let's say this is my candle. I'm just getting the cursor on. Yeah. Now I'm saying that this candle's EMA or moving average in this scenario minus the previous candles. Okay. Let me zoom again. So this minus this and should be higher than 0. This minus this should be higher than 0. This minus this should be higher than 0. So on and so forth. So that, why do I need that? So that the line I get is a uptrending line. I want a bullish line, not a bullish line. I want a uptrending line. Okay, like this. So that's what this difference lets me identify. Little bit of math there, little bit of math trickery there, but it basically says that in previous candles the EMA of the current candle minus the EMA of previous candle was higher than 0. That means in last 20 candles, if you skip the latest 25 candles, previous to that last 20 candles, the trend was bullish. Okay, so by mistake I have opened this one, so let's cover this, then we'll go back to V bottom. So this is what I'm saying. For the last, if you skip the 25 candles, this last 20 candles period, the trend was bullish. Okay, that's what has been identified by V top here. Then after the 20 candles, after the recent 20 candles, the trend has reversed. Okay, So the trend has reversed. So period max period max of EMA close 20 and EMA close 20 with offset 1. This equation, or this way of writing it, lets me get the difference of current EMA minus previous EMA, current EMA minus previous EMA, previous to that minus previous to that, and so on and so forth. That should be the maximum value of that should be lower than 0, that in which indicates that after certain points. So example is, if I draw here, if I try to draw here, this line is negative. Why? Because when I subtract this candle's EMA and this candle's EMA, the difference is negative. Okay, so the difference is negative. Okay, now negative is nothing but less than 0. Now why have you used period max? Because I'm saying the maximum difference should be less than 0. That means that at no point of time the EMA increase. In between these periods, or in between the 20 candles, the EMA was constantly falling. Why? Whereas previously I've said in the in that period, in after that offset of 25 candles, the EMA for 20 candles was constantly increasing. Now I've just drawn here to explain what I've tried to create, to keep it very simple. If you just run the scan, you get JK cement. Let's plot that and we'll see what do we get. So JK cement. So I'm just opening that. That scan is run on a 15-minute chart. So let me make it 15-minute chart. Okay, and let me just edit this to be EMA. I'm just showing here, sorry, close EMA 20 period. That's just to indicate that short form. So yes, so as you can see, it's a V top. This is the top, and a V has obviously been formed here, right? And once this has formed here, also it would have been formed, and this is indicating that before this there was a strong bullish trend which has reversed and is indicated by the V top. Now by mistake I covered V top before V bottom, not a problem. We'll cover V bottom now, so that we have understood how you can identify a direction or a line which was bullish by this method, and by this it was falling down, so bearish. Now let me take you to V bottom. So this is V bottom. Okay, it's the same thing, it's just that I'm now saying that earlier the line should have been falling, that's why lower than 0, period max and lower than 0. Now in the recent candles that have come, in the latest 20 candles, the trend should be rising, right? So if I just run this scan, I get Ind Hotel. Let me just open Ind Hotel, and the pattern will be reverse. So as you can see here, we have created with 30. You can obviously change this point to say how many candles back you want the trend. Is it 30 candles back, 30 candles long bullish trend? So we have put 30 candles here, so that's why you can see here that this has been identified, because these many candles back, it was okay. This is on our chart, so let me just change this to our chart. Brilliant. So you can clearly see a V bottom pattern here. So previous to 30 candles, the trend was absolutely bearish. That's why the difference between the EMA here and the EMA here is negative. That's why it is lower than 0. The maximum value is lower than the 0. EMA never increased. Now in the recent candles it has increased, and that's what is being identified by this second condition, that the lowest difference between the current EMA and the previous candle's EMA has become positive, and that's what is identified, and that's why we get in total. And this is a simple V bottom scan. Okay, I hope we are clear till here. There's a lot of things that we covered, so you can pause it, you can watch it again. If you have any questions, you can ask us. Once you get the hang of it, there's nothing easier than this. Anything you see on chart, you can easily create it on scanner like this. Now coming to next pattern, which is broadening pattern. So broadening patterns are characterized by formation of higher highs and lower lows. Very simple to understand. The new highs that are being formed are higher than the previous highs. That's what higher highs mean. And the new lows which are formed are lower than the previous lows. That's what the lower lows means. Okay, they look like mirror image of a triangular pattern and resemble a homophone, sorry. Broadening patterns can appear at the bottom of a downtrend or at the top of an uptrend, and they also are predominantly categorized as reversal patterns. Okay, but can very less often also act as continuation patterns depending upon the breakout direction and the prior trend. Okay, unlike the previous ones where we knew that they are reversal patterns, this is a bit more subjective and this needs a bit more understanding of what is happening before that. Okay, more often it appears at the top of a trend. Okay, broadening patterns represent a period of expanding volatility and disagreements between the buyers and sellers, because buyers are taking it up, sellers are pulling it down, and the down that they're bringing it is lower than the previous down, and then buyers start to buy again and they push it up higher than the previous high. Okay, that's why. So now again here we have put a picture sort of to clearly explain why offsets are being used in the same in a certain manner. Same thing can be applied to the head and shoulders patterns we saw earlier, both the top and bottom, and the v patterns as well. So now that we see higher highs are the reason which are being compared, and the lower lows are the regions which are being compared. So now let's look at this. Even though the picture has so many complicated lines that needs to be identified, it can be simply created in this fashion. Okay, so all we are saying is the new high is which is being formed, okay, is higher than the previous high. That's the first condition. The second condition says that the previous high was higher than the high previous to that. So that's the first two conditions. The second two condition just indicates this, that the new lows, which are the latest low that has been formed, is lower than the previous, and then the one which has been formed before that is lower than that as well. Okay, so let me quickly go and show this in scanner. So we are covering a lot of ground here, so if you guys need any help, feel free to ask. But this is how this condition looks. There is no multiplication, nothing here, for those people who sort of want very simple patterns to be identified. So again, the current candles, the most latest candles high, that 20 candles high that has been formed, is higher than the older 20 candles. So this basically is confirming that the higher highs are being formed, these first two conditions. The second two conditions are just checking for lows being formed, and if you just run this scan, immediately you get the stocks on which the conditions have met. So let's just start with Thyrocare. So let's look at this. So this is why it has been identified. If you look at in the days we have been scanning it for 20 candles, the highs that have been forming are highs, and the lows that have formed are sort of lower, so like this, right? So this indicates that a broadening is happening like this. Okay, so this is how a broadening pattern can be created, where you are identifying higher highs being formed and lower lows being formed. So let's move to the next slide. So how are patterns traded? Okay, so patterns should be taken in the direction of the breakout. Patterns occurring in the middle of the trend and breakout in the same direction as the trend are called continuation patterns, as explained earlier. Patterns occurring at the end of a trend and breaking out in the opposite direction of the trend are called reversal patterns. Most often traders calculate the target by adding the height of the pattern to the breakout. Height of the head and shoulder pattern is calculated from the neckline to the top of the head, but that is very strictly. You can also try to be a bit more realistic and conservative, and you can say height of a shoulder as well, right? Conclusion. So there are various different kinds of patterns in this second part 2 of webinar. We have covered these 3 patterns. If you want another part, feel free to write to us with the patterns that you would like to see, and we'll try to do a webinar on them as well, right? So there are different types of patterns that occur daily in the market due to the actions of market participants. A good scanner can make it easy to discover these opportunities. Stop loss should always be used when trading patterns, because even the most perfect looking patterns can fail. In many markets where patterns are most probably used, the performance is reduced. Due to this, some traders also trade pattern failures, which basically says, okay, a pattern is not going to be formed. Pattern failures is caused when the breakout of the pattern is invalidated. Okay, as many traders are trapped in the breakout, they rush to cover the position, creating a big price movement in the opposite direction of the breakout. For example, in the neckline of head and shoulders top, if the neckline of head and shoulders top is violated on the upside on high volumes after a down breakout, the pattern is said to be failed. Okay, so keep this in mind. The percentage values that are used in examples in the slides can be adjusted to align for smaller time frames, because obviously when we are looking for 30 minutes or 1 hour time frames for which we are scanning, 1% using 1%, 3% makes sense. But for a more intraday or a smaller time period of a trade, these patterns can this percentage can be adjusted and used. Okay, very ideal looking patterns occur less frequently, but even though when they occur, you have to be very careful in terms of identifying some more technical support for it, and identifying that there is good volume. Okay, so this has been my time, guys. Thank you for joining us. Feel free to write your questions to support at streak.tech. Follow us on at streak.tech. And thank you, guys. Have a great day. Bye bye.